Hello everyone, and welcome back to another training video. In today's video, we're going to be talking about the different types of market analysis. Okay, so let's jump straight into it. Now, the content of what we'll be running through today, we'll look at the different types of market analysis, which are fundamental analysis, sentimental analysis, technical analysis, and then we'll see how we can pitch all of them together. Okay, now let's start off by looking at, so why the need for some sort of analysis? Well, the truth is, in order to make trading decisions, you would need to analyze the markets, you need to analyze and then develop ideas as to how you would approach it. So think about it like you're trying to start a business. If you want to succeed, you need to analyze, look at, okay, where do I get my goods, or how do I produce my services, and who do I sell it to, what are the prices? So you make analysis to ensure that at least give yourself the best shot at making profits, right? The same way, when it comes to trading in Forex markets, we don't just wake up and decide to buy or sell. We want to analyze, want to make our trading decisions to either buy or sell based on some form of analysis. Now, the three main types of analysis are the technical analysis, the fundamental analysis, and sentimental analysis. So the sentimental analysis, not really analysis, it's just more like looking at what the crowd is, more like crowd mentality. Now, in order to be fully grounded as a Forex trader, it's actually very important for you to understand the three types of, the concept at least, of these three different types of analysis. Because even if you're going to focus on one, so for example, I'm more of a technical type trader, because I make my trading decision based on price and what price is doing by looking at the charts. But a lack of understanding of technical and sentiment analysis would actually be detrimental, because you probably won't understand why certain things happen in the market. So you want to understand all these three aspects and then maybe focus on one. So it's more like standing on a three-leg stool. Now, if this is a stool, for instance, and you have on each three legs, making it balanced, and then one of it is broken, or you don't fixing one of it, it will be quite difficult to balance out and stay afloat. In the same way, in order to not be weak or not to be lacking in a very terrible way, you want to have some idea as to these three different market analysis concepts. Now, so we'll begin by looking at fundamental analysis. What is fundamental analysis? Well, we'll come back to technical analysis. But technical analysis involves looking at the charts, while fundamental analysis is more about looking at economic data, right? Looking at news reports, headlines, major events, and how they could potentially affect the price of an asset or an instrument or a commodity, right? So, for example, what moves price in general is demand and supply. The law of demand and supply is why things appreciate or depreciate. When there's more demand for a particular asset, the price goes up. When there's less demand, the price drops. When there's too many supply, the price drops. When there's very little supply and then more people need it, that scarcity, the price appreciates. So fundamental analysis is a way of looking at the Forex market by analyzing economic, socio-political, and macroeconomic factors that might affect price. So basically, it is a way of analyzing the potential moves in a currency or an instrument through the strength and weakness of its related, economic or macroeconomic news. So in terms of currencies, it will be looking at trying to figure out if a currency would be strong or appreciate by looking at the economic outlook, or at least potential economic outlook for that particular instrument. Now, in a nutshell, the better shape of a country, like if a country is a good economic state, right, it's going to attract more investment, it's going to attract more foreign business, and more people will be willing to buy and hold the assets of that particular country. As a result, this rush to obtain these assets cause a demand, which will therefore cause a rise in price in the long term as regards to that particular instrument. Now, for example, let's say the US dollar has been gaining. So the dollar has, let's say the dollar has been gaining strength because the economy of the US is improving. Well, that's all good and fine. However, the central bank themselves has a policy. The Fed Reserve Bank have to make sure that they keep the economy in a state where it's fair. Sometimes being too strong is not necessarily what the government is looking for. Sometimes they just want it to be at a particular level. You can see an example of that would be Japan. The Japanese government doesn't want its currency to be too strong because they are an export-based economy. They don't want their currency to be too strong because then it will make it difficult for people to buy from them. So everybody, obviously every different region have policies or have, certain areas where they want their, how they would rather prefer their economy to be. Now, because back to our example, because the economy is getting better, the Federal Reserve Bank might decide to raise interest rates, right, to control things like inflation and growth, and control growth, because sometimes because there's so much money in the economy, it might cause inflation or hyperinflation. So, but this raising rates, which would make it more difficult for people to borrow money, is actually quite good for the currency, because then it means, well, people will be more willing to invest in dollar assets because therefore they're going to get more returns for their investments. And this flow of what I say traffic to the dollar would then cause a demand for it, making it to rise. Now, you don't need to become an economic guru or understand all the nitty-gritties of economics and then start watching all the business news and all of that. The main point here is that if an economy is performing well, the value of the currency is most likely going to be strong. And if the economy is performing poorly, the value of the currency is most likely going to be weak. Therefore, when reports are to come out, so economic reports are scheduled to come out, the result of those reports can either push price up or down in a quite significant way. And this is where the way fundamental traders look at it. So using the Forex, so there's a website called forexfactory.com. That's Forex, then factory, FACTORY.com. You would, if you go to that website, you'd see fundamental reports of all the major countries, right? And obviously they are related currencies. So something like, okay, when is the next non-farm payroll? When is the next unemployment numbers going to be released? When is the next GDP? So you would see these things on a day-to-day, week-to-week basis. And so you can know that, okay, by 2 p.m. so time, this report is coming out. And then you would see, so fundamental traders look to forecast or look to trade based on the actual results of those news reports. So that's all fundamental analysis. Obviously, it's a little bit more complicated than that, but that's on the basic sense how fundamental analysis is all about, and basically how I use fundamental analysis. Okay. Now, next one, we'll look at sentimental analysis. So I'm keeping technical analysis for last because that's going to be what the core content of our trainings going forward will mostly be based on. But then what is sentimental analysis? Well, this is not actually a type of analysis where you look for certain things. It's actually, sentiment analysis is used to gauge how traders feel, right? So what's the overall bias of traders? Do they think a particular currency or a particular currency pair would move up or down? This is actually based on sentiment. Now, earlier we said, okay, when it comes to fundamental analysis, price tends to move based on these economic factors, demand and supply. Well, it's not that simple because the forex market do not simply reflect all the information out there, because all the traders will not act the same way. So basically, if a fundamental news comes out, some traders might interpret it a certain way and decide to buy, and others might interpret it a certain way and decide to sell, right? So this is why sentimental analysis is where it comes in, because each trader have their own opinion as to why the market is acting in a certain way. Now, in most cases, you find a crowd type of mentality where, price of an asset might be at a certain price and majority of the trader are looking for, anticipating the price to reverse or do something else. Now, in many cases, the crowd is wrong. So you can even use that to your advantage, and it's not necessarily always going against the crowd, but using that pairing it up with some other things like fundamental or technical analysis to try and make a trading decision. So that's why I say it is not really a form of analysis. You can use something like the COT reports to look at gauge trader sentiments, right? So it's up to you to gauge how the market is feeling, whether you're bearish or bullish, and then decide how you want to incorporate this perception of sentiment into your trading strategy. So basically what you will be working with most of the time is based on technical analysis, and then understanding when these major fundamental news are coming out and how you react to them, right? So sentimental analysis is just basically crowd mentality, where you want to understand where the crowd is going and sometimes use that as an edge to position yourself to make even more money, maybe by going against the crowd or sometimes going with the crowd. But it's all down to looking at crowd mentality. And then, it's kind of basically, so here was what I'm trying to say. It's sentiment analysis. The way I use it as a contrary indicator. So if everybody is looking for price to go up, most likely price tends to go the other way. So this is kind of like go against popular opinion, because, well, most of the times the masses are wrong. And now we'll come to the elephant in the room, which is technical analysis. So what exactly is technical analysis, right? Now, technical analysis is the framework in which traders study price movement, right? So the idea is that a person can look at the historical price movement and determine the current trading conditions and potential price movements, right? Now, let me explain that in a bit. So basically, we do this all the time. We look at the past and try to make prediction as to what will happen in the future. We do that every year with times and seasons, and when it's winter or summer or rainy season or dry season, we expect things to happen in a certain way because things have been happening in a certain way in the past. So let's take, for example, the rainy and dry season. So let's say there's a rainy season, the dry season, and the harmattan. Now you expect that, okay, between would I say January or to like, I don't know. So let's say from like November till January, you expect harmattan, and then let's say around to like March, basically. Okay, let me get this right. Now, I'm not that much of a weather person, but you get it wrong. Within a certain period, would expect a certain weather, right? And then once that period is done, would expect, okay, after the harmattan, we expect a dry season, and then a rainy season, and then, the harmattan again, and then that cycle continue every year. Now, it doesn't happen exactly at the same time, but you can say, okay, within a certain period, we expect the rain to begin. And then within a certain period, we expect the rain to stop. And this is basically, in a sense, analysis by looking at historic action of a certain thing to try and predict future events. Now, in this case, we're looking at price. So technical analysis is a framework where traders look at previous price movements to try and make sense of what will potentially happen in the future, because the idea is that price tends to repeat. Actually, the universe tends to repeat itself. The main evidence for using technical analysis is that theoretically, all market information is reflected in price. That means price is telling you the whole story that there is. That's in theory. Now, technical analysis look at the rhythms, the flow, and the trends in the price action, because history tends to repeat itself. So looking at price, you'll be able to decipher, oh, okay, this chart, when this and this looks like this and happens, potentially, in many cases, at least in more cases and more often than not, these other things happen. And then we can use that to make up a trading decision. Don't worry, when we start looking at, market structure, which will be some of the next we'll discuss, we'll look at market structure, price patterns, candlestick setups. You'll understand all of this in a nutshell, and it will make more sense. So the whole idea is, if a certain price is, sometimes this is where support and resistance, one of the key fundamentals of trading comes in, support and resistance, demand and supply levels, because people look at certain areas. It's just like once it starts to hit December, people start to expect the harmattan to come. It might come late November, it might come early December, but at least around that period, there's an expectation for it to come. If it's April, people start looking for the rain to come, probably March, April, or May, whichever. Start expecting the rain to come because of the time, and that in the past, at this area, this particular level, at this particular time period, you'd expect something like this to happen. So that's what technical analysis is all about. When we look at the chart, try and make sense of what the chart is saying, and then try to, predict potentially what is going to happen in the future and try and make profits from that. So technical analysts look for similar patterns that have formed in the past and will form trade ideas, believing that price could potentially act in a similar way, or maybe in the opposite way, but they will try and figure out a way to take advantage of it. Now, technical analysis is not much about prediction, as it is more about possibility. The goal is not to predict to be right. It's about stacking up the probability that you will be right. Now, one thing I want to drill in your head, especially for those new traders, is the goal is not to never be wrong, right? The goal as trader is not that you want to trade in such a way where you never make losses. No, that's not the goal. The goal is to stack up the probability in your favor so that when you're wrong, you're a little bit wrong. And when you're right, you're very right. At least that way, you will come out at the top. So the goal is to make profits, is not to win every single trade. So understanding of this, that we're not trying to make forecast and prediction, more about understanding and stacking up the probability in our favor would give you an edge in the market. Now, technical analysis is the study of historic price action in order to identify patterns and determine potential future direction and price structure. So looking at the chart that you can see on the screen, you'll see that this is the price chart. It shows price movement over a particular period of time within a certain time frame. What I just want you to focus on here is just look at it. Now, if you look at this whole thing here, it's just price movement, right? So let me bring out my pen. So this whole thing here is just, price movements. What you see price doing is just move up and down, right? Now, what you notice is certain things happen. The price, first of all, price doesn't move in a straight line. It moves in somewhat of a zigzag pattern, looks like gibberish. However, when you pay attention to it, for example, in this case, what you start to see is that, well, it's actually quite that, maybe price is respecting certain areas. You can see that at least it's a region. Don't worry, when you come into supply and demand or demand support and resistance, you understand this even better. You can see that price had trouble breaking through certain areas, right? So let me clean up some of this. So price had trouble breaking through this level, and that area in this particular instance is serving as resistance. And also you could see price failing to break below this level, in this case serving as support. Now, a technical analyst would look at this area or see that price rejected it once here, rejected it twice here, and then when they see price coming back to this point, they start to anticipate a possible rejection. Now, it's not about saying, oh, it has happened before, it has happened a number of times in the past, it must happen now. It's all about understanding what area should I be looking out for opportunity. Now, the moment price starts to get back to those areas, you start watching for confirmation. Don't worry, you learn all of how to look at the price and how to probably make up come up with confirmation based on what is comfortable by you. But you learn several different trading systems and strategy. But in this case, traders will just look at that same level. And then when price, comes back toward those areas, you can see they look for confirmation within here and use that as a reason to sell. And in this case, well, they make a lot of money. And obviously, you can see down here, price got here, rejected it. The next time price came back, they could possibly look for, you could possibly be looking for potential rejection because it has happened, it has rejected that area in the past. And then we use that as a reason to get involved in the future buy. So that's what technical analysis is all about, where we try to stack up the probability of what price would do by using the price action in the past and further confirmation to make our trading decision. Now, technical analysis is the study of historic price action. Now, in the world of trading, when someone says technical analysis, the first thing that should come to your mind is charts. So when you hear technical analysis, just know we're talking about price charts. Now, technical analysts use charts because it's an easier way to visualize historic data. Now, like I mentioned, mostly what I am is a technical trader. I based all my trading decision based on price. and what price is doing. I don't really pay so much attention to fundamentals. The only reason I pay attention to them is to figure out, okay, certain high impact news is coming out at so and so times. So maybe I want to stay away from the market or maybe protect my positions, right? So you can look at past data to help you spot trend, understand patterns in the market, which could help you find some great trading opportunities. Now, what is more is that traders who rely on technical analysis, there are a lot of traders there. There are lots of indicators, signals, So because a lot of people are looking at the same thing, it tends to become a self-fulfilling prophecy. And actually, self-fulfilling prophecy that can actually be used inversely. You learn about those with me in the future. Now, as more and more traders look for certain areas, the price level and patterns become more likely to occur because they tend to manifest themselves. As we mentioned, price tends to repeat itself over and over again. Now, one thing that you want to have in mind is that technical analysis is very subjective. What I mean by that is just because two people are looking at the same chart doesn't mean they would use the same information out of it, right? It's not going to be the case. Everybody's not going to make up the same, it's not going to come up with the same conclusion when you look at the chart. And this is because everybody looking at it from their own perspective. Somebody might be looking at it and be, a market where it's bullish and you think it's bullish, somebody else is trying to sell because they think it's bearish. And you can be right and they can be right within the same structure. Maybe you're trading the market on a smaller time frame and trading it on a larger time frame. Once you understand how to be your own type of trader, right, and understand your niche, it doesn't matter, right? So it's very important to understand that technical analysis can be subjective. You just want to understand the market from your own perspective and then make up your own trading strategy based on what is comfortable for you and by you. Okay, so now putting it all together, the main points here, we'll just do a brief review. In the real world markets, prices are constantly moving. Prices is never stagnated, so prices are always on the move. And as traders, we're trying to take advantage of that fluctuation in price, either going up or going down, trying to make profits. Now, we need to find a way to understand or to read the market and make operating decisions. And this is where these different types of analysis come in. So there's the fundamental, where we look at economic state of the currency of an economy, and then make up our mind as to what will potentially happen. So, for example, if Russia goes to war and Russia is a major supplier of oil, then it will probably cost the price of crude oil to go up because there will be less supply, which will cause scarcity, and therefore which will cause increase in price. That's how fundamental analysis work, by looking at certain economic reports or political or geopolitical events that could affect price movements. Now, none of these are better off than the other. It's just you have to figure out the one that you are comfortable with and then figure out the way to trade that. Now, at the end of the day, you should base your trade, you should trade based on the type of analysis that you're most comfortable with, be it technical or fundamental, because sentiment is not really a type of analysis, but you want to understand all these three concepts. Okay, so that's where we call it a wrap for our training session today, where we looked at different types of market analysis. We'll be spending a lot of time looking at fundamental technical analysis. We'll do some we'll have some videos, a couple of videos on fundamental analysis as well. But this is where we come to the end of this particular video. Remember, I hope if you have questions, just put them down in the chat below, and I'll see you in the next training. Until then, stay safe and have a wonderful time. Wow.